I want to start first with looking at the housing market and seeing what might disrupt it. Mortgage rates clearly are low. They may go even lower because of the rally in treasuries.
Sure.
Is there a bottom for mortgage rates? And I ask this because we've already seen the 30-year fixed rate, according to bankrate.com, hit a low of 3.32% back in September 2016. Is there a level at which it just won't go any lower?
No, I think it's like any other market. I mean, it all depends on the overall conditions. So I wouldn't say that there's an absolute floor for where mortgage rates can go.
So if the 10-year goes to 1% and we see it perhaps going below that, watch out below?
I think we could see mortgage rates continue to decline, yeah.
When you look at how low those rates are now and the potential for them to go any lower, do you worry, though, that maybe the balance that we have in the market, meaning between individual buyers and, say, more speculators and other folks in the market, that creates imbalances at all?
Well, look, there's actually not a great balance in the market at the moment. I mean, we have very low mortgage rates. We have very low supply of housing. And so that's what's driving housing prices up. So in many ways, this affordability challenge really reflects an imbalance in the marketplace.
You know, lower rates often spur homeowners to refinance their existing mortgages. Of course, there's a cost involved in doing all of that. And the conventional wisdom is that you wait until rates are at least 1% lower than your current existing rate. Is that still the rule of thumb, given the existence of non-bank lending platforms like Blend out there that can maybe reduce that spread?
Well, I think there's the economics of it, and then there's the convenience factor of it. So I wouldn't say that lending platforms are changing necessarily the economics of it from the consumer's point of view, although it doesn't make it much easier for them to shop. So that's a benefit. But in terms of just the hassle factor of applying to refinance your mortgage, that hassle factor has gone way, way down. It's much easier to go explore what your alternatives are and be able to do that in some cases in a matter of seconds, certainly in matters of minutes, as opposed to days or weeks in the past.
Yeah, I mean, the ease of just being able to shop around, even just being able to close a loan is just it's astonishing compared to what it was when I first entered the home market 20-something years ago. But when you look at the companies that have sort of been at the forefront of it, it hasn't necessarily been the larger banks, the larger institutions. It's been relative upstarts. And I'm wondering, do we get to a stage where those upstarts become the new behemoths, or do they just get absorbed by, I don't know, the JP Morgans and other big financial institutions of the world?
So I think there are a lot of different players in this. There's sort of the pure fintechs that are actually lenders themselves, who are out there using their balance sheets and trying to grow that business. But at the end of the day, it's pretty hard to compete with, the 5,000 to 6,000 banks in the country, to say nothing of the credit unions. There's a really big balance sheets out there. And I think that the technology that's now available to those incumbent institutions is much, much better. So they can actually provide a similar consumer experience. And they already have the customer relationship in many cases. And they actually have the balance sheet and the credit risk-taking capabilities to do what you're describing.
And I'm glad Romaine brought up M&A because consolidation in fintech is certainly a big trend right now at the moment. We just heard about Intuit buying Credit Karma.
Right.
Of course, there was Visa buying Plaid, Morgan Stanley buying E-Trade. You could put in that category as well. What do you think is the bigger read-through for fintech?
I think that we're going to continue to see some consolidation among the more mature fintech companies. It's not surprising that incumbents want to acquire those capabilities. Some of it's just a matter of acquiring some very important plumbing that's out there in the marketplace. In some cases, they give them access to data that they wouldn't have otherwise. But I think we're really at the early stages of the whole fintech revolution. You're going to continue to see new companies get created. They're going to proliferate, and we're going to see a kind of a continual evolution in that space.
Where do you think the advantage is going to lie for companies? So is it going to be being that intermediary, being a platform, or do you really sort of need to be at the end there with the balance sheet, with the cash ready to lend?
Most of the innovation in the fintech space has really been in non-balance sheet businesses. So it's one of the reasons why payments has been a place where fintech has really made great inroads, because you don't need a balance sheet to do that well. It's all about just making the transaction as simple and fast as possible. I think there's more reluctance by fintech companies to go into balance sheet businesses because it introduces a kind of risk that they don't have in the pure technology space.
Yeah.
Before we let you go, I wanted to ask you a question about Fannie Mae, if you could put on your old hat for a moment.
Sure.
Nomura had a report out saying that if Bernie Sanders were to win the Democratic presidential nomination, that would likely boost the chances that the White House will end the conservatorship of Fannie Mae and Freddie Mac before the November elections, because the thinking would be his nomination would motivate the White House to act with more of a sense of urgency. And I wanted to get your take on that.
Look, I think this administration is already very committed to having the companies exit conservatorship, Fannie and Freddie. But this is a long and complicated process. This is a very, very big financial transaction that's going to be involved here. I mean, we're talking about floating out the stock of these two companies. They'd be the biggest IPOs in the history of the world. So it's not something you can just like barrel your way through. They might take steps to try to move it down the road a little bit faster, but I think it's unlikely that the two companies would exit conservatorship before the election.